Hey traders, welcome back to the FXE YouTube channel. We had some really nice moves last week, but overall price action continues to be extremely choppy, and looking at the daily time frame, it appears we are in a massive consolidation. For today's video, I'll do the regular top down as well as a review of price action and give some ideas of what may come. Let's talk about fundamentals first. So we have a heavy week of news ahead of us. But before we talk about the news, let me remind that we're still hearing talk about the increasing inflation in the US. This should promote higher interest rates and a stronger dollar. But for now, we haven't seen it. So this will be a major week to determine if in fact we start to see the dollar go to the moon, or we start to see some disappointment in the market and it comes down. So if we go to the news and look at what's coming this week, so first of all, we have daylight savings in Europe and the UK. So for those outside of Europe, you'll need to adjust your kill zone indicators and keep in mind that London session will start an hour later. And then on Monday, we start the week with news in Europe, so CPI for Germany. And then on Tuesday, during the New York session, we have CB customer confidence. And then on Wednesday, so Wednesday is a big day, during the New York session, we have ADP non-farm employment change, we have ISM manufacturing PMI, and then we have JOLTS job openings. And then in the PM session, so this is when all hell's going to break loose, we have the interest rate decision. So this is going to be a major event, and we're going to see a lot of volatility at this time. 30 minutes later, we have the press conference. And then on Thursday, we have unemployment claims during the New York session. And then on Friday, more big news. So we have non-farm payrolls on Friday, as well as unemployment rate, as well as ISM services PMI. So as you can see, we have a lot of heavy news this week, and as we have interest rate decisions, this is going to have a huge impact on the dollar. So the way I see it, we get confirmation, inflation strong, interest rates go up, and then the dollar shoots to the moon. As of right now, it's projected to remain the same. But at the same time, we could see a scenario where the rates do remain the same while inflation is rising. It's seen as a major disappointment, and then the dollar just tanks. So that's the second scenario I can see regarding the dollar, but I think the more likely one is we get that confirmation of the strength in the dollar and it starts to shoot up. So moving on to the charts, starting with the yields first, we still have no clear indication where they want to go. The 5-year kind of looks like it wants to come down. Looks like it topped out, came and retested the daily fair value gap, pushed up from there, retested supply, and now it looks like it wants to come down. 10-year on the other hand doesn't really show us much of anything. 30-year kind of looks like it came down for the inefficiency, reacted off of it. Now it's coming down and testing demand, and kind of looks like it wants to push up from here. So as you can see, there's really no clear indication for the time being. Fundamentally, it would make sense if they continue to push up from here, but at the same time, we have reached extreme highs. Maybe it does want to come down, start to break or shift on the daily time frame and really start to push down for a deeper pullback. But again, I really reiterate, the reason why the yields are so important is because they kind of act as an early indicator of where the dollar is going to go. So now moving on to DXY. On the monthly time frame, nothing's changed, so I'm going to skip it. I'm going to start with the weekly time frame. So we know that structure is bullish, but for now, we just seem to be ranging right now. We don't have much clarity on which direction DXY wants to move next. But what we can see is last week's candle, it swept the lows. So swept the lows here, came into the weekly fair value gap, reacted off of it, and then pushed up. Came into the daily fair value gap, had a reaction off that. And if I had to take a guess, based on what the chart is showing me, it looks like it's ready to push up from here now. Okay, so on the daily time frame, I would say something similar as to what I said about the weekly, with a little more clarity. So we came down early in the week, swept the sell side liquidity, filled the weekly fair value gap. Thereafter, we had a reaction and a massive push to the upside. We had continuation. Thereafter, we swept buy side liquidity, came into the daily fair value gap, and thereafter we had that initial reaction after tapping into that daily fair value gap. For now, we don't have any continuation to the upside. We more or less closed the week where we started the week. Looks like we're doing a little consolidation at the same time right now, so giving some signs of indecision for the time being. But based on what the chart is showing me, although the daily fair value gap above is still holding for the time being, we've come down and filled the lower inefficiencies, and we may just continue up from here. So now moving on to the hourly time frame. So looking at the hourly time frame, we started the week with a nice retest of this 4-hour fair value gap right here. From there we shifted bearish, and thereafter price pushed down to the weekly fair value gap. Then on Tuesday, after filling this fair value gap, DXY had a reaction and started to push up from here. It reacted to the highs that were created at the beginning of the week. We had a slight pullback, but then after that we had continuation to the upside, once again reacting off a bearish fair value gap. So we had a pullback, and then after that price continued further to the upside. Then on Thursday, after filling the daily fair value gap and started to have an initial reaction, in the end we just started to consolidate in this area. And then on Friday, what we can see is we had one last we had a retest of this fair value gap that was created on this push down, and then after we had continuation to the downside. But unfortunately we didn't have continuation. We had some inefficiencies here, some PD arrays. We had a hourly demand as well that we reacted and pushed right back up, ending the day more or less in the middle of this range. So that's where we ended the week. Although we created a shift and a second break at the end of the week, we haven't really broken anything significant yet. So significant as in something on the left. So if we broke that, then I would have saw that as more of a significant break, and looking at the possibility of further continuation to the downside. But for now, it looks like the bullish PD arrays are being respected, and kind of looking like that DXY just may continue to push up from here. I think we'll start to get a little more confirmation on that once we start to break these highs, and then when we have that news next week, that will really be the one that drives the price in one direction or another. So once we have that, then definitely I'll do an update, because I'm sure the chart is going to show us something interesting, and then we can go from there. So moving on to EU next. So as with DXY on the monthly time frame, nothing's changed, so just gonna skip it. So looking at the weekly time frame, so we know the structure is bearish. we can see that price is pretty much just ranging for the time being. Although we had a nice push to the upside, so you can see this massive wick to the upside, all it did was clear inefficiencies on the upside, and then we closed the week bearish. Momentum is still to the downside. The only thing that is clear on this time frame is that buy side targets have been hit and EU has reacted off of them. Nothing confirming for the time being that it's going to continue further down for the time being, but when I look at the chart, it appears more likely, and knowing what the fundamentals are telling me, it seems like we may have topped out and EU is going to push down from here. So now if we go into the daily time frame, what we can see is we are still creating higher highs and higher lows. So for the time being, structure is still bullish. Last week you can see we clearly swept the buy side liquidity. We came and retested the daily fair value gap and then had a massive reaction thereafter. If you watch my previous video analysis videos, you'll know that that was my first preferred area to look for reversals. So whether this is it or not remains to be seen. We need a little more data, but kind of looks at it like it for the time being. So although EU has come down quite aggressively from those highs, in the following 3 days it failed to break the structure lows, which is down here, and it looks like, it's just consolidating for the time being. What we can see is EU did sweep some short-term sell side liquidity and had a nice reaction off of it. We had some continuation on Friday, but we failed to continue higher, had a pullback at the end of the day. We ended the week with a doji candle, so more indecision. I don't know. We're getting some clues that EU may want to come down instead of pushing higher. This could be just a typical TGIF scenario where we just had that pullback for the end of Friday. And there is a chance that EU may still push up from here. But there are a lot of strong signs that the pullback may be over, and we continue to see lower pricing from here. So we'll get that confirmation once we start to break some structure lows. Okay, moving on to the hourly time frame. So you can see we started the week with a nice drive to the upside. So the market open, we trickled down, and then we had Japan open, which drove the price to the downside, bringing the price back into this inversion fair value gap. Then London came around, we had a nice push to the upside, giving us our confirmation when we had the pullback to take longs. After the high was broke, the range high, we had a little consolidation, and then New York played around for a little while, but eventually continued to push the price to the upside. This was a massive push to the upside that happened within just a few hours. We ended the day with a break of this high, thereafter consolidation. The next day on Tuesday, Japan opened, gave some confirmation for longs, so the price pushed up higher, breaking the range high. Thereafter a little more consolidation, and then we had London open. London open drove the price even higher into this daily fair value gap. We had a reaction off of it and a massive drive to the downside. So this drive to the downside cleared all the inefficiency that was created on the push up. There was some inefficiency at this area on the left, and that's where price more or less consolidated to end the day. You can see that we continue to consolidate until Japan open. Japan open, you can see right here we had that drive to the upside, pullback for long entries where you could have taken it, not a big trade, but to the fair value gap on, I believe, the 15-minute time frame on the left, where we started to have a reaction and reversal, bringing the price to the downside. Broke the range low, broke the this low over here as well, and thereafter once again consolidation and then pulled back. Pullback came into this supply that was created on that drive down, and thereafter continuation to the downside to end the day. And then on Thursday, Japan opened with a pullback and then continuation to the downside. Continued down until London, and then London had a pullback, which eventually continued to the downside up until New York. This right here was related to news, so you had one last massive manipulation to the downside. This manipulation to the downside cleared all of the sell side liquidity that was resting right here, so you can see there's a whole bunch of equal lows right here. All of that was cleared with this drive down. We had a really nice reaction and immediate push to the upside. This push to the upside, you can see it cleared the range high, creating an hourly shift. And then once the hourly shift was done, we had a pullback back into the extreme, and then from the extreme another drive to the upside, once again breaking the previous high. Thereafter just a lot of consolidation to end the day. And then Friday came around, Japan session started with the drive down, but ultimately pushed the price to create higher highs, tapped a little into this daily fair value gap, and then had a reaction, pull back to fill the inefficiency, and then continuation to the downside, going to the extreme, the order block on the left. Thereafter, once again pushing back to the upside, once again breaking the highs, breaking this high over here as well, but creating equal highs with this high right here. So this right here is now a buy side liquidity target for me. And you can see once it played around at this level for 3-4 hours, eventually it came right back down to end Friday. And then for me, this drive down is just a TGIF Friday, a TGIF trade, sorry, to end the day, and nothing more. Because for me, I'm still looking this as bullish. I'm bullish on the hourly time frame. Daily shows signs, a lot of bearish signs, but structure is still bullish. And we've seen in the past where we've had these crazy pullbacks, like this one right here, where it broke all kinds of structure. But then there was a level that held, and thereafter we pushed up higher, and then eventually broke the previous high. So whether or not we're at the extent where we're going to go and target and break the highs again, that I don't know. What I can say is we're at least going to go for this buy side liquidity. So when I look at the structure that's been put in place at the end of the day, the two bullish scenarios I can see is we have these equal lows here, so building of liquidity. This for me is an easy sell side target where we come down into this demand zone or order block, and from here have a shift and push to the upside, targeting the buy side liquidity here. The second scenario I can see, second bullish scenario I can see, is we come all the way down to this low right here. Probably some consolidation right at that level, come back up and then manipulate into the hourly demand that we have right here, shift, pull back, and then continuation to the upside, targeting the buy side liquidity. At this level, there is an hourly supply right here just above the buy side liquidity. That could be an area where we shift and reverse and come right back down. But at the same time, if we break this level, it's likely we'll come into these two areas of inefficiency, one of these two areas of inefficiency, and then see what happens there. We could have a shift, come back down, pull back, continuation up, or it may just melt. But ultimately, I would like to see price to come up in this area, regardless of bullish or bearish. I'd like to see it come to this level first, and then if it reverses and comes down, then I wouldn't be surprised. But at the same time, if it did continue to push to the upside and break these highs, I wouldn't be surprised about that either. In terms of bearish scenarios, so when I look at the structure that's created, we have this daily fair value gap right here. So we completely filled it and then came back down below it. So maybe that's all that's required, and it doesn't have to go higher to come back down. Yes, it did equal highs, but I don't know. Maybe it comes back for it later. So for this scenario, what I could see is from here, we come back into the daily fair value gap. The daily fair value gap acts as resistance. We also have a refined hourly fair value gap here, so maybe that will be the area where we have a shift from, and then come back down and target the lows. So as of right now, my preference is to look for higher pricing, at least, or at minimum, to take out the buy side liquidity. What happens then will remain to be seen, but I wouldn't be surprised if we continue to push higher and targeted the inefficiencies above that. But at the same time, even if it continued to break the highs, I wouldn't be surprised about that either. But at the same time, I think we'll need the help of news to drive the price further up. So the scenario for news is that we have inflation going up, the interest rates remain flat, the market is completely disappointed because they were thinking it should be going up, not remaining flat, and because of that, the dollar tanks. So that's the scenario I have in mind where we may be able to continue to drive the price higher on EU. And to sum up, the clues have been put in place on the weekly and daily time frame for EU to start driving to the downside. But the hourly indicates that EU may not be done pushing to the upside. That's not to say that EU is going to create higher highs at this point, but at least go for the equal highs and potentially the inefficiencies left above that. For me, EU has hit my initial buy side targets, so EU coming down from here would make a lot of sense. But at the same time, you look at the weekly range, it makes more sense for EU to have a bigger pullback, at least coming into premium before the next big drive to the downside. But I believe the news will be a big factor for driving the price for a bigger pullback or pushing down aggressively for the lows. And one last thing I want to show you to support the idea of a bigger pullback. We know that price is fractal. We know patterns repeat. This is how we build our internal knowledge base. Now, I want to show you DXY on the daily time frame when we zoom out. So I've mentioned before that past data shows that before a major prolonged move, we often have consolidation for weeks before the actual move starts. If you look at what happened here in Q4 in 2022, we had this massive consolidation before the massive push to the downside started. And if you look at what's happening right now in Q4 in 2023, the picture actually looks quite similar. And if it plays out in the same way, then we may be seeing the last pullback, retesting the highs before a massive drop. And if we compare EU, so if we look at EU, the picture looks very similar. EU created a lot of bullish, choppy, higher time frame structure for weeks back in 2022. And then we had that explosive move to the upside. And if you look at what's doing now, the picture looks really similar, just on a smaller scale. and we could be seeing the last pullback before a massive expansion to the upside. So for now, I'm not convinced in any way this is going to happen. I just want to present the possibilities of what could happen. Anyways, that's it for this weekend's update. It is clearly one of those weeks where I'm less clear on my bias. I have some ideas of what price is more likely to do and potentially what it could do, but nothing really so clear. We have a heavy week of news next week, so you'll need to trade cautiously and take profits early in the week, and wait for those big news events and let the news clarify what price wants to do before entering any trades. So hopefully you found value in today's video, and if you did, a like and a subscribe would be appreciated. Get some rest this weekend, and I'll see you for the next one. Peace.
Black Swan.